Hey everybody, welcome back. Sive Morten here with the ForexPeaceArmy.com. Let's take a look again on the Forex market, mostly on the euro currency. So across the board, you could see market starts forming some shy signs of the some bullishness. So you can see, for example, on the euro currency on the daily chart, we see this morning star pattern has been formed. But at the same time, nominally, we do not have reasons or better to say rights to go long, just because currently nominal trend remains bearish. So from this standpoint of view, this might be just a retracement pullback in long-term bearish tendency. The moment when we could start thinking about taking the long position, we need to get changing of the trend direction. Besides, you could see that here lines are coming closer to each other, and maybe not today, but somewhere on Monday, it is a risk getting bearish grabber in this point. So you could see that situation stands a bit contradictional. So from one point of view, we have potentially bullish pattern. From another point of view, currently at this point, we do not have ability to go long, at least on the daily chart, just because context remains bearish. And a similar situation stands across the board. So if we take a look at the Great British pound, if you remember the same situation that we were considering, and we just said that market shows no response on the support, here something started to forming. Also a kind of the engulfing pattern here is forming. And on the hourly chart, you also see potentially the head and shoulders. So on euro currency situation looks very similar. So if you go back to the 4-hour time frame chart, yesterday we said take a look, maybe 1550, 1567, an area that market could try to test. And indeed, you can see these lows have been retested. It's also 30% level. This is at least the minimum target of the potential butterfly that has been formed here. We already talked about this. So how better to resolve the current situation? So today's Friday, and in general, if you're conservative, I would suggest that you do not need to take any long positions by far. So wait for clarity concerning trend direction and the grabber. If we will not get neither of them, so if trend will turn bullish and we will not get the bearish grabber, that will be a more or less safe situation. Start considering any bullish chances that might be formed on the intraday charts. So here I would even say that in this area we also could keep an eye on the possible bearish signs. So it also might be interesting once something will be formed around it, because as I said, it might be just a pullback before downside continuation. It also might happen. At the same time, on the hourly chart, here's what we have. Trend that line that we discussed yesterday has been broken up. And in fact, I would say that the performance that we have on the 4 time frame chart, it's some kind of the bearish momentum trade. So bearish bread and butter. So we have strong downside action and the first retracement after the significant drop. Market has reached the 30% of this most recent downside action. It's definitely, because this is from this top. From this top, it definitely stands around, even not the 30, but probably slightly higher. And usually when you have the thrusting action, it suggests a bit deeper retracement. In the current circumstances, if you're still thinking about taking a long position, it's not bad. So theoretically, I also think about possible more extended upward reaction, especially since we've got here this bullish pattern, and I hope that we will not get the grabber on a daily chart. But still, just to get less risk for this current setup, since this is probably kind of the momentum trade, it makes sense to wait for a deeper retracement. It will just decrease your potential risk, because tricky moments exist. This setup current is not 100% reliable, right? So we have some contradictional patterns around, and just to minimize your risk, it's better to consider lower retracement, so deeper retracement. So I would suggest at least the 50% of the whole upward action here. So it's a retesting of this trend line. It's around probably 1510 area, and of course the 618, 115 even. So that's deep retracement, especially if it will be in the way of some kind of the ABCD pattern. That might also get you regardless triple to buy pattern, for instance, and it will be at least something that's more or less reliable that you can try to use. At least you will get a better chances to move stops to the break even if you will have the support area and some bullish patterns on the back. Right now, at this point, well, personally, I do not want to buy immediately, so I prefer to wait for some retracement down. If we will get bearish grabber on the daily chart, of course, it means that it would be better to not consider taking a long position at all, just because in this case it might be another downside continuation of different scale, either to the next target or at least taking out of these lows. But anyway, that will be bearish performance. So that's also the pattern that we need to control. So here's what we could say about the Forex market right now. See you next time.